I have a huge opportunity for you. I'm offering a private 1 hour lesson and there are only 5 spots available. Don't miss your chance to secure a spot. Here's how to claim your place. Subscribe to the channel first, like this video and comment below saying you want to join the call. Enjoy the video and act now. Good morning guys, it's been an amazing week. Amazing trade setup in Asia, in London, in New York obviously. Amazing. I took a lot of trade, good quality trade, but I want to step back. The last week in the video I'm talking about the setups, and today I want to explain better the theory behind the setup and then go to the chart to analyze the trade setup happened this week. First of all, I divide the day in 3 main sessions. Okay, we have Asia. I want to make this bigger. Asia, each hour is based on New York time, so Google it if you don't know what time is it. Asia, 8 to 11 p.m. New York time. London is the second session of the day, 2 to 5 a.m. New York time. And then finally we have the New York session, 8 to 11 a.m. New York time. The middle hour of each session, middle hour, is the equity open, except for the New York, because the equity open is at 9:30. It's really important because we work on this 3 hours window in each session, 3, 3 and 3. The equity open, the equity hour is in the middle, so 9 to 10, 3 to 4, 9:30 to 10:30. This is the main area to look for an explosive move. Sometimes we can have trade in the first hour, so 8 to 9 or 2 to 3, 8 to 9. This is all. This is the 3 session. So now we can look forward and look for the specific trade setup. And the first element that I want always to begin a new cycle, a new potential trade setup, as I repeat over and over again, is the failed breakout at the previous day's low or the previous day's high. Better if it's the high of the week or the low of the week. First element, peak formation low in this case. The day ends. Day 1 that is confirmed only when the next day or the day after is this day remaining inside day breaks out and confirm the peak formation low in place. Day 1, day 2. Now we have a day 3, but we are in the front side of the move. We are in the front side. This is the first half of the pump and dump or the breakout pullback continuation. This is the first move, the front side. So day 3, it can happen everything. I wait. Maybe the day 3 continue to go higher and then pulls back inside. And now we have day 1, day 2, day 3 on the front side, and maybe at day 1 this is a failed breakout of the previous day's high, or in many cases the high of the week. Day 1 we wait. Day 2 maybe continue to go lower, and then we are in a day 3, front side, back side. The day 3 can or reverse, so in line with the peak formation high, pump, peak formation high and dump, or it can break out, pull back, for the blow off in the direction of the trend. Breakout, pull back, blow off in the direction of the trend. Front side, back side. Day 1, day 2, day 3. In this way, so they goes up, they goes up, and they goes up again, and then day 1, day 2, we are on the inside. At this point, I remove this line. At this point, when we arrive in a day 2 and we are near to the day 3, we are here. When we are here, I measure the low of the beginning of the cycle, day 1, and the high of the day 3 that becomes the day 1. This is the box. This is the box. Day 1, day 2, day 3. The day 3 that becomes a day 1. Sometimes it can happen that the day 3 continues to go higher and the next day makes the day 1. Or the day 3 maybe close up high, we have an inside day, and then, so 2 days later, they pull back inside, and the day 3, it becomes a day 1. Not the day 2, the day 3. At this point, I choose the option of the simplicity for explain as clear as I can this concept. If you measure the low and the high, from the low to the high, or from the high to the low is the same, with the Fibonacci tool that is custom, and you can put this input 0.66 or 0.33 to create always 3 main level. In this way, I think that it can be simpler than before for everybody. And when we arrive in a day 2, I look at where I am. So in this case, we are in the middle box, okay? We are in the middle box. The day starts and it immediately breaks higher. In a realistic way, usually, if they goes up, we arrive in our session that we are up high, just above the initial box. Now we are in the third box, up high. And if in the session, this market, so remember always, timings, level, behavior of price. If before my session, I'm here, and maybe in the first hour, max in the second hour, the market dumped down into the low of the third level, and confirm that this low is in place with the price action behavior of price. It reverses in the day itself for the dump and pump blow off in the direction of the trend. Instead, if they want to go lower, and we are in the second box at the end of the day 2, in a realistic way, we have the day that started here, and before my session open, we're still in the second box in many times, and we have a pump into the high of the second box for the dump, pump and dump template in line with the second peak formation, not the first, the second. So breakout, pullback, and reverse. Sometimes we arrive in the session that we are already down low and we are here, but before the session we are in the third box, okay? Now we are in the third box before the session, and this market stay inside. I do nothing, as simple as that. If they goes up and push up into the high, I shorted. If they goes down in the first hour and put the low in place, I go long. There isn't any option. There is any other option. This is the trade setup. I want the front side for the back side and the day 3 blow off in the direction of the trend or reverse on the inside. The second type of front side that I'm looking for is when we have, as always, the failed breakout at a high. In this case, it's the same, up or low, up or down. We have the failed breakout at the high day 1 that is confirmed on a day 2, and the day 3 instead continue to go lower, as in the previous example, the previous setup. They reverse immediately on the inside. Now we have a peak formation high, a peak formation low, day 1, day 2, day 3, and the day 3 ends. And what I said 5 minutes ago, the day 3 must become the day 1, not the day 2, not any other day, the day 3. So in order to have a day 1 from this day 3, I want the failed breakout. Okay? In the next day, they confirm the failed breakout, breaking this low. Okay? And now we are in a day 3. At this point, the process is the same. I measure my structure, and the day 3 can blow off in the direction of the trend or reverse. If they reverse, they will go up. If they continue to go slower, it blow off in the direction of the peak formation high, the first. Okay? Day 1, day 2, on the back side, this is the front side. This 3-day cycle is the front side, and now we are in the day 1, day 2, and we are in the third box. Okay, the day ends and the day 3 open in the third box down low. If they want to go lower before my session, maybe we are already in a blow-off move, and before my session we are here in the lower box. We are already in breakout. This is an extension of the initial box. Okay, day 1, day 2, day 3 form the front side. Day 1, day 2, day 3 form the back side. And if I am here before my session, there is only one option: pump and dump. The blow-off move that trap every trader that wants to go long, maybe at the low of the week, thinking that this market magically goes up. Okay, and we can have another variation of that. If the market before my session maybe is up here, down here, and dump it down, dump it down, dump it down, maybe we can have a scalp trade long after 1/3 of expansion of this high-low box. Okay, I don't want to buy something at the 50% level in a reversal situation. I want to maybe look for a 50% trade. When I say 50%, I think to that simply 50% of each box. Okay, and in the other side is that if the market want to goes up, they breaks the high, and I'm here before my session for the dump at the start of the session, first or maximum second hour, for the pump, dump and pump template reversal, day 3 reversal, in line with the second peak formation. So guys, this is the two main setups that I'm looking for, two main front side that determine how the backside can be. And there are only 3 other things to consider it other the setups itself, and are timings, levels, and behavior of price. Timings, level, and behavior of price. When I arrive in my session where I am, when touch the low of the box or the high of the box, what time is it? My session, what time is it? 8 to 11 a.m., 8 to 11 p.m., 2 to 5. The equity hour, What time is it, the equity hour? Timings is crucial. Levels, I want to know always where is my high, where is my low, and where is my 50%. I always want to know that. Behavior of price. If the market want to reverse, and for example this is the low, and want to reverse, maybe it can does something like that, okay? Instead, if they want to go lower, they go simply lower. Behavior of price. Sometimes it can happen that makes 3 pushes out and pulls back inside for the trade long or for the trade short. And when we have this type of situation, levels and timings are crucial to know how to react at this thing. So trader, now we can finally look at the chart. I want to start with saying that there are 8 different pairs with the same setup in each week. I'm looking for always the same setup, and in total, if you take all this trade, you will make around the 44 risk reward gain of your account. That it can be the 50%, easily the 50% gain of your account. This is amazing, guys. We can start with the USD MXN that gave us an amazing clean trade this week on Thursday. So we can start the process searching the front side, the first half part of the setup, the front side. In this case, we have in the past week the market that goes lower and lower. On Thursday, this market breaks down in the US session and they pull back inside. This type of move generate, if the day 2 confirm, generate a peak formation high. This is a failed breakout of a level. Okay, the market breaks down and breaks higher above the high of the current day, and the day after breaks the low. This is a day 1, day 2 scenario, and now we want to know how the day 3 behaves. It continues to go lower or they reverse on the inside, as in this case. So now we have the second type of setup that I showed you previously, day 1, day 2, the day 3 that pulls back inside. And at this point I want that this day 3 become the new day 1, and we have this type of situation when the day after breaks a little bit the low, maybe not the cleanest in this zone, but it breaks the low. It trap trader at the end of the day down low, all the Asia session, trap trader down low, and then it traverses on the inside day 1, day 2. At this point I measure my range, high and low, and or reverse in the direction in line with the second peak formation, or the blow off in line with the other 2 peak formation, first and the third. Where I am when the US session starts, where I am in the second box. Okay, we are in the second box, and in order to have a sell opportunity, I want that the market push up into the high and dump it down and fail. Or in order to have a buy low setup, I want that this market dump it down into the low for the pump. And we can look at this chart because it's important to understand that sometimes there is a trade setup and it goes in the right direction, but maybe in the same day there is another cleanest opportunity. This day I'm not sure if I can trade it because the day 2 is not really perfect. I want a clear day 2, a clear breakout, okay, in order to have a sell high setup or a buy low setup. But anyway, the market at the start of the session, this is the 30-minute chart. We are here, okay? Immediately in the first 30 minutes breaks out of the box. The breaks out. The second candle of the session pulls back inside. The third candle makes the lower low. We can zoom in. This candle, the third, so the first half of the second hour, the equity hour, we have the lower low respect the previous candle after the breakout pullback lower low. If the one goes up, it goes up, and period. Instead, we are on the inside. This market push up into the high, lower low, and it's only this time I can scale in to the 1-minute chart to see better where can I enter in this market. And after the lower low, that it is this candle, basically this candle, the first 30 minutes of the session, the first 30 minutes of the second hour, the equity hour, we are here in this zone. This is the lower low, and now I want the pump. Where I want the pump? Into the peak formation high. These are peak formation high at the 1-minute chart. I want the pump here. Sometimes it can goes up and breaks all this peak formation and reverse up high. But we have the lower low, and if the reverse up high, we know that is a sell setup. But in this case, we have the dump in the first half of the second hour, they pumps up high, and this is 9:29. So 1 minute before the equity open, and in this zone, I can enter everywhere when I want. If you are sure enough, you can enter here, or here, or here. I don't know. You can enter in any of this zone with the stop loss above the peak formation high. So these are peak formation high. I want the stop loss up here, 15 pips, okay? And this is a bad opportunity, but in any case, 15 pips, the target is down low. When they reach the 50%, so in this case we have around 90 pips, so 45 is in this zone. When this market reached this zone, I start to take the money off and manage my position, because it's a choppy market and it can reverse at the 50%. It's not really clear. When it's clear, it's a straight down move. They don't do that, okay? And I can move my stop loss here when they breaks lower again, maybe here when they breaks lower again, maybe here, and maybe we take a partial and we leave another part of the trade, work on this trade, and when they breaks lower again, I start to move my stop loss again here, and then lower and lower to reach the target. That anyway, 15 pips for 80. This is an amazing trade setup for everyone, but for me, for us, no. This is not clean. I want the clean setup. And we can move on when the day 3 remain on the inside, because this is not obviously a breakout, evident breakout. When the day 3 remain on the inside, the next day still the day 3, because we have an inside day. The inside day can generate the explosive move that we can see on the following day. The level remain the same. When the day 3 that remain on the inside ends, we are in the second box. The volume is up here in the second box. Asia starts and pull back definitely inside. okay? And London remain inside again and push lower before the session. Push lower into the low of the box before the session, and the session starts here. The first thing that the market does in the first 30 minutes before the news release at 8:30 New York time, they push lower in the first 30 minutes with a pin hammer. At this point, I want a simply entry because this market pushed down into the third box, pull back inside immediately. This is the higher high. But 8:30 there is a news release, so we wait. I do not trade, never before the news release. I want to be in the market before the news release. Maybe if the news is in the third hour and I trade, I open a position in the first hour, because in many cases after 45 minutes, 60 minutes, the trade is over. In this case, we have the breaks out 2 hours before the session. This market pulls back inside in the hour before the session starts, and this is an higher high, okay? This is a clean higher high, and now at this point I can scale into the 1 minute chart to see better when and where I can enter. Timings, level, behavior of price, higher high, where is the peak formation low, the major peak formation low? Down here. So in this zone, the low bear, the middle structure, any level here is pretty the same, this zone. And before the news release, we have the dump into the low, and news release 8:30 push down again into the low, many inside bar push down again into the low, and finally the breaks out. This is an easy trade, and the market explodes immediately. We can manage this trade. The first target obviously is always the other side of the box, and when they reach that, it can reverse or again continue to blow off in the same direction. And the 50% of this box, 93, as previously obviously 47 here, they go through without here that without any indecision. They go through the 50%. At this point I can start to think that maybe this is a strong move, and when they reach the 50%, I go immediately break even first. Second, when they reach the high, I can move on my stop loss down low, take some money off, and leave that the market works for me. Second target, it can be the 50% of this box, and we are up here half an hour before the US session closes. And at this point, we close sure another partial of the position with maybe the stop loss down low and the market stop us. But if you are more conservative with the stop loss down here, the market reach easily later in the day the 1 to 6.5 RR risk reward with one single trade. For example, if you put the 1% of risk on this trade, you make the 6.5% in one single trade. If you have 1K, if you have 100K in one trade, 6.5K is amazing. At this point, we can look forward to the next pair, silver, that give us another excellent trade. First thing, I want to look for the front side that I know. Failed breakout at the high, breakout that pulls back on the next day and breaks the low. This is a peak formation high, day 1, day 2. Day 3 remain on the inside, I wait, and the next day breaks higher. So day 1, day 2, day 3. This is my box. Day 1, day 2, day 3. The day 3, it becomes the day 1. Yes. Failed breakout with a simple pin, but we are at the low with all this volume. These traders are trapped short, and the market shift, and we have day 1, day 2, day 3. That becomes a day 1, day 2. The next day, trap trader in Asia up high, day 2, that breaks the low before the ends, and we open in a day 3 in the first third of extension below the initial box. I want to trade the silver in US, and this market, when the session starts, where they open, where they closed, just inside the third box down low. At this point I can say definitely that I look for the pump and dump blow off in the direction of the trend of the first peak formation, the third peak formation. This is not a reversal trade in line with the first. The first is already taken out. And so at the 30-minute chart, we can look at this chart for a lower low, and this market pin into the high in the first 30 minutes and close inside again. And then we have the lower low. At this point, I can scale into the 1-minute chart, and we have the lower low here, where I want the entry anywhere above this line, because here there are the peak formation of the session. Okay, the peak formation. If this market pulls back inside and it's 9:30, as in this case, I can enter here and let the market evolve easily. I put my stop loss above the last peak formation here, where you want. Be conservative in many cases is the right thing to do. 8 pips for a minimum of 35 in 3 hours, 2 hours and a half. So 18, 16, 1 to 3, 1 to 3. Yes, a good trade. And this trade continue to go lower. If you manage that, you can make easily 1 to 9, 1 to 3, 1 to 3, 1 to 3. So 1 to 9 in one single trade setup in less than 20 hours. It's amazing. Next trade, the Nasdaq. This is my favorite trade of the week. I took this trade really clean, no doubt. When I'm really sure of what's happening in this chart, I can trade it. We have the failed breakout at the high. This is a trap long, a failed breakout in the first hour that trap everybody long, and then reverse and shift the market immediately. Day 1 that is confirmed on the day 2, same exactly behaviors in the first hour, pin down and pull back inside. Day 1, day 2 that confirmed the day 1, and we have also this breakout that helps. And day 1, day 2, now I wait, or the day 3 blow off, and we have day 1, day 2, day 3, or the reverse on the inside. In this case, a reverse on the inside. Now we have the front side of the move. The day 3, it must become the day 1, and when the day 2, the next day, breaks the low, we have a day 1. Same exactly trade setup of the silver. Peak formation, peak formation, peak formation. Same exactly trade setup. Peak formation, peak formation, peak formation. Day 1, day 2, day 3. That becomes a day 1, day 2. The day open, the day 3 open in the second box, but I trade obviously the Nasdaq in the US before my session. I'm already in a breakout. This is one-way zone. There are only seller in this move, only black candle. It's amazing, only black candle. When the session starts, I'm in the first third of extension. So in order to have a pump and dump blow off, I want that the market pumps up into the high, and the market open here. The first 30 minutes pumps up into the high and pulls back without breaking any level. And the second candle, it makes immediately the lower low. When they make the lower low, is already done. Lower low, I want the pump where into the peak formation high, into the peak formation high. But we are at 9:25 and it's risky trade the indexes before the US Open, because the US Open can spikes up and down, stop everybody, and then moves. So I wait. This is 9:35. I want a trade at this stage, at least up here. This is all peak formation. Above this line is all peak formation, pump and dump, breakout pullback, pin hammer or inside bar, and breaks lower again. I enter in this market here with the stop loss. Maximum stop loss in this case is when is too big, the distance before your entry, and the peak formation is always maximum 25 to 30 pips. In this case, to be conservative, 30 pips is the right size, the right stop loss, and I let the market evolve. I let the market works for me. The first target obviously is the low, so 140. Amazing. 3, 6, 9, 12, 1 to 4.5. Amazing trade setup. And if you manage that, this market blow off again to reach the 50% of the next level, and the next day, bang, it blow off definitely to reach the low. This is an amazing trade setup. USD yen is the next pair that give us the trade in Asia. This is the only trade in Asia for this week. No, there is another trade in Asia, Euro yen, and we can see that later. Peak formation high day 1, day 2, that confirm the peak formation high on the past week. I want to looking for the front side that I know, peak formation, day 1, day 2. Day 3 with all this pin that trap trader into the low, and the day after continue to go slower with this type of break at this type of pin. And day 1, day 2, day 3, as previously said, sometimes the day 1 shows the next day. In this case, the day 1 is this failed breakout that breaks the high the next day, day 1, day 2, and now we have the first type of setup that I showed you previously in the theory zone. We have the high, this is the peak formation high, and the low. So the day 3 that becomes the day 1 is now low. This is the day after, the day 3 that becomes the day 1, day 2. And look at that, look at this day 2. They push higher and fail. They push higher and fail. They push higher, maybe not enough to say that this is a best trade setup, but it moves as I'm expected. I can adjust this line with the high bull, the low bear, the low. This is a reference level. Maybe in this sometimes it can be a little bit too higher, a little bit too lower, but if you're not sure, obviously you don't trade. You can always looking for only the right behavior at level without change anything. This is a thing that you can do when you master the setup, master your craft. Okay, so pumps higher and fail, pumps higher and fail, pumps higher for the third time with a pin into this zone, and makes the lower low. When they makes the lower low, I simply wait for the pump and dump into the high. We can look at the 1 minute chart. Here at the end of the session, they makes the lower low. All these are peak formation. This is a peak formation. This is a peak formation. So any level of this inside at this line are a peak formation. All these, and this is the lower peak formation high that I have on the left. So the pump higher, I can enter here. I don't care if they goes a little bit too late after my entry. When they comes back up high, I can enter again because it respects this zone. I have my stop loss above the last peak formation up here, and there is 7 pips. If I'm not sure, I can have a stop loss above the last the higher peak formation high before this and this, so 10 pips. Then let the market evolve, and this market blow off completely. And the first target, for this reason I tell you 10 pips, 8 pips, 12 pips is the same, because the target is 120 pips. The first target is 120 pips, the first. So 1 to 10 at the first target. The second target obviously is the 50% of the following level, and the final target is the third of this the 1/3 of expansion or extension. Amazing trade setup for USD yen that you can trade it in Asia, because there is yen and USD you can trade in US. You can notice also that when we arrive in a day 3 in the US session, that I can trade in the USD yen, this market remain on the inside and do nothing. If they want to go lower again to complete the extension, they pumps up into the high and they dump. Instead, they stayed on the inside and then breaks down on the next day. But I don't care what the market does the next day. I'm only looking for this trade on this particular pair on this week. One trade, I'm done. 1 to 5, 1 to 10. I'm wrong here. 1 to 10, at least 1 to 10. Amazing. 1 to 10, 10% of your account. 1K is 10K of gain in one single trade, in one single pair, in one single week. I'm not lying. The people think that I'm clickbait, but I'm not lying. I'm upside down in black and white without short. I don't care. I don't care. USD, Swiss franc, next pair. Peak formation high on a day 1, day 2, confirm the peak formation high in the past week. If I want to trade this week, if I want the front side formed by 3, 4, 5 days, if there are the inside day also, I'm forced to look at the past week, at the previous week. In this way, you can take you will take always the right eigen low. We trade short term. I don't care if the market in the daily chart is completely broken down market, but I have a buy low setup. I can trade the buy low setup in a downtrend in a daily chart. I don't care what happen in the daily chart. Sometimes it can give you some information. Sometimes you can find the same exactly setup that I look for the day, okay, the week, etc. in the daily chart with the year. You can look for this setup on the weekly chart. You can look at this setup on the monthly chart, whatever. It doesn't change anything. So USD, Swiss franc, failed breakout at the high that is confirmed. The next day, day 1, day 2, the day 3 remain on the inside. And we have a reversal. This market, this pair, just at the beginning of the week on Monday, drop traders immediately to go long in the Asia session, and the Asia session goes only short. This is a day 1, day 2, inside day 3. is forced to buy this impulse and short this creeping trend. There are obviously trap traders anywhere here. Day 1, day 2, day 3. This is the front side. This is the front side. I want the day 3 become the day 1. And as previously I showed you, when the market breaks higher and pulls back inside, breaking the low, in this case is really like that. But this is the real low, or this, not sure, this candle of the midnight on Monday. And we have the peak formation day 1, day 2, that is confirmed on the next day, so peak formation low. And now we have day 1, day 2, day 3, so dump, pump, day 3 that reverse on the inside, and we have another peak formation low that is confirmed on a day 2. So now we have a peak formation high, peak formation low, another peak formation high up here, but is take over to the peak formation low that start to move higher. But at the end of the day, the market pulls back on the inside, trapping every trader long from the start of the week, and hitted the stop loss of everybody. This market closes in the third level. In Asia, lower low immediately, lower low, respect the previous day's low, pulls back into the high USD Swiss franc. I want to trade it or in London or in US, not sure in Asia. Push up into the high in Asia, pulls back inside with this creeping trend that loaded the volume for the first hour. In the first 30 minutes there is a news at 2 a.m. New York time, and this news makes immediately another lower low. The high is already touched and failed. Lower low, pump and dump. This is a blow off. This market trap everybody to trade long down low, but instead blow off in the direction of the day 1 peak formation, the first day 1 of the front side. This is a breakout, a pullback continuation. If you look at the big picture, this is the low, this is the high. When they break a pullback, trap traders to buy down low, and instead this market blow off in the direction of the initial breakout. This is a trade setup, and there are only 2, and all this trade, okay, with only 2 types of front side. And if you know what looking for on a day 3 on the back side, you can have this explosive move. We can take a look to the 1 minute chart very quickly, but it doesn't care, because when you have the setup, the entry show alone. This is the lower low in the first hour with the news. Where is the peak formation? Anywhere above this line. So here, all these are peak formation. And when I'm sure, I entered short in this situation. This is the peak formation high, the last. I remove this. Okay, this is the lower low. If the market pumps up and go through, I surely don't go short. Continue to go higher, pulls back, but they breaks all this peak formation. I want something stronger, and continue to go higher, breaking other peak formation, but we're still on the inside. It's still fine. There is another peak formation in this zone. The market pulls back and break the middle structure. When they break the middle structure at this point, I can enter everywhere with my stop loss just above. As simple as that. 6 pips or 9 pips. It's fine. This is the high of the day. It's fine, 9 pips. And the first target obviously is the low of the box. So 21, but it goes through like butter. That goes through at least 1 to 6 at the end of the session. You can surely manage this trade. easy trade. It goes only lower. There is no worry in this trade and no stress. It goes only lower. When start to push up like this, I can close a lot of my position, maybe leave the 10%, 50%, 20% of my position in, but the remain partial of the position, it must be closed. You must take the money off at the 50%, at the other side of the box, at the other 50%, and the low in this case of this box, and you can go through this process until the market stop you at break even. You are already in profit, you have already money in your pocket. Is amazing, it's perfect, and there is nothing to worry about it. The other trade that I want to show you is Euro-Yen day 1 that confirmed this high. On a day 2 we have also this breakout very strong. The day 2, the day 3 remain on the inside and then reverse on the next day. So day 1, day 2, day 3. The day 3 must become the day 1. And it confirmed the failed breakout of the day 3 when the next day breaks the low, day 1, day 2. Okay, now we have peak formation high, peak formation low, day 1, day 2, day 3 on the front side, and day 1, day 2, day 3 on the back side. Okay, I measure at this stage the range, and at day 3 starts, we are already in extension. Okay, in the third, 1/3 of the extension of this initial box, here. We are already in extension. This is the other side of the box, the low, and in the first, and before 30 minutes before the open of Asia, Euro-Yen, I can trade it in Asia. The market pushed down into the low and failed. This is basically a pin hammer, a huge pin bar, and then we have the higher high. That you can see how this higher high trap trader to short into the low is perfect, the perfect example of the trader that are trapped to trade lower with a pin hammer, a beautiful pin hammer, but into the low. After they make the higher high, there is no lower low in the session, there is only higher high, and at this stage I can scale into the 1-minute chart, and this is the higher high, the pin hammer, the trap trader short. And where are my peak formation? Sure, at this level I have a peak formation. This 3-bar reverse, it can be a peak formation, and I want to remember you that I look for the 1-minute chart at the end of the 30-minute chart. So I'm down low. I'm here. This is 8:20 p.m. New York time, and we are at the peak formation low. When the market breaks like that, 8:32, in this zone I can enter everywhere with the stop loss below the last peak formation, 25 pips. The first target is, as always, the 50% that I locked in the money. I protect me. Maybe I took some money off, maybe 1/3, and I leave the other position, the other size to the market evolves. Okay, and at the end of the day, we reach the high, so 1 to 5. This is a good trade, not amazing, but still tradable. And behind this trade, there is a process. And this is the key to understand. There is a process that you can apply in each instrument you want. We can look for the spot crude oil that I add this pair because it was very clean, but unfortunately not tradable, but still an amazing example of a trade setup, of a clean trade setup. And if I want to trade in this week, I always start from the previous week. And we have the day 1, the day 2, I remove this, day 1, day 2, and the day 3, and the day 1 again. So the day 3 that becomes a day 1, this is the first type. Day 1, day 2, day 3 that breaks higher. day 1, day 2, when I arrive in a day 3 where I am here in the US session, down low. And for all the session until the last 30 minutes of the session, we are in the inside and it not happen anything. This market continued to go higher, and now we have a day 1, a day 2, and a day 3. Okay, so front side, I want that the day 3 becomes the day 1. They pull back inside, and the next day 1, day 2. Okay, day 1, day 2, I measure my box, and they closes in the third box up high, 1, 2, 3, and fail, pulls back inside. At this stage I want a pump and dump in line with this peak formation, day 1, day 2, day 3, day 1, day 2, day 3, that blows off in the direction of the trend based on the first peak formation of the first day 1. This market remain on the inside for all session long and pumps up later in the day, lower low for the pump and dump, but the real trade happened the next day. In my opinion, it's too risky trade the day after, but it was a pump, a force red day, and a dump, so sure you can trade it. And this is only not my main setup. If it shows like that, and the market pulls back, tapping the high with a doji, and bang, lower low. At this stage I want that the market push up into the peak formation high, up here. They push higher, and this zone is my entry zone in an hypothetical trade with the stop loss up here, 30 pips for 200. Amazing trade setup. Blow off day 3, blow off in the direction of the trend. The final trade setup happened on Thursday. On the S&P 500, I took this trade. This was an amazing trade setup. It exploded very quickly, and again, the past week we have the failed breakout, pulled back inside. Day 2, day 1, day 2, that confirm the peak formation low in place. Day 1, day 2, day 3. Now we have the front side. This is one of the two type of front side. The day 3 must become the day 1. The day after breaks the low, confirming the peak formation high. Day 1, day 2. The day 2 closed in the third box down low. They pumps up in Asia and fail. They pumps up again higher and fail lower. This is weakness of the long traders and strength, obviously, of the short. I start to think a reversal trade, day 3, reversal trade, peak formation low, peak formation high. The reversal trade is in line with the second peak formation. They pumps up and fail, they pumps up and fail, and they goes lower. They goes lower again before my session, and they open here. I can zoom in, and we have a touch into the high in the first 30 minutes. In the second 30 minutes of the first hour, they go through. In the first 30 minutes of the second hour, they go through again, but this time we have a pin hammer. And now we are now we have 3 candles that touch the high, 1, 2, 3, 1.5 hour. They dump it down in the last 30 minutes of the second hour for a trade in the third hour. I can look at this chart after the lower low, and where is my peak formation after the lower low? That is here. I have sure this peak formation and sure this peak formation. The market immediately after the lower low pumps up, try to go lower, but it doesn't engulf nothing really, and continue to go higher I want to be sure when I enter in the market, because when I enter, I want to be in the right side. And so I prefer wait 1 minute. Uh, I prefer wait 1 minute that enter in the market 1 minute before, and then the market stop me, and 5 minutes later, 10 minutes later, 15 minutes later, give me the real entry. In this type of a situation, the market breaks high and pull back, breaks high and pull back, and it doesn't go anywhere. Breaks out and pull back. Lower low at this stage. We have the middle structure broken. I can enter in this zone everywhere with my stop loss up here above the high. And even if I enter here, 8 pips of stop loss for at least 37, 1 to 3.5, and if you manage this trade 1 to 7 in one single trade, the 7% of your account, or the 14, or at least the 10% of your account, if you manage really well this trade and you put a certain amount of size in your trade. This is all the trade setup of the week. I'm grateful with you. The support that you show is amazing. I want to share as many information as possible in the easiest way possible. And remember, for the call, this is a huge opportunity for you to learn something new, to go through this simple process and learn more and more again. So thank you, trader, for the attention. Have a great weekend and see you later.